Hi everyone, welcome back to my YouTube channel. If you haven't already liked and shared, subscribe, please do that. Today I'm just going to be doing 600,000 Rand, investment in an apartment in Kempton Park. We're gonna go through the Kempton Park report for July, right? Just showing us the area profile, much like we did with with Claremont 2 weeks ago. Thanks so much for the engagement of that video. It actually reached one of the agents that had listed the property, and he says it sold out like this. So really good that the video is going wide and people are picking up on it. I'm really appreciative of that. All right, so we're seeing 455, 555. I'm just gonna choose the top one. Oh, this is nice because they've got the unit number as well. But let's go with this. Avalon. Okay, let's have a look. So it's a 2-bedroom apartment. They've given me the road. It's Avalon, that's the name of the complex. And it's got garages, so that's nice. Great for storage as well. Okay. Alright, in a built-in kitchen. Good size. The bedrooms are also a good size. It looks like it's recently well maintained. The paint is good. So I don't think you're gonna need to do a lot of work to get your next tenant in. Okay, let's see. We know the price is 455. I'm quickly just gonna jot it in here. Okay, that's the market value. And let's say we're gonna offer for 400. We're gonna be a bit cheeky and offer 400. Let's go and fetch the other information. Okay, if the agent gave us any. So that just that it's a 2-bed. I don't have, okay, I do have levies. Levies are 805. The levies are 805, but what I want you to remember is that COJ has 805 plus the recently increased sewerage, which is not included here. But I think Kempton Park doesn't fall under City of Joburg, it falls under Ekurhuleni. So I'm going to say plus 600 because it was 704. I'm not sure what Ekurhuleni charges for sewerage, especially for apartments, because I've got a standalone Ekurhuleni. So let's just say 600 there, but I can see that those levies as Pelelanga. Let's see what we have for rates. Okay, for rates we've got 421. Let's jot that in. Okay, let's go and look at the rental amounts. That's definitely too high for this type of an apartment. Let's see if we've got everything from the listing. Yeah, that's not gonna help our model. That's not really gonna help. Let's look at points of interest. Okay, it's close to a couple of schools. Yeah, all right, so they're saying the bond at 10.75 is 4619. Let's make our bond amount, this also 10.75. We also have the 4061. Mind you, that 4061 does not include, they're saying 4619, 10.75, 20 years, 455. I had 400. Okay, let's bring this up a bit. Let's do 100%. I just want to show you that my model is calculating the bond repayment correctly. So we're not going to put a discount, and we're going to put 1% deposit, and our transfer costs are pre-calculated. It's going to be 42,000 that we need to pay up front. We don't think we're going to fix anything. We don't think we need anything for refurbishment, repairs and maintenance. I think that's fair. Property management, I'm going to keep it at that. Lease up and vacancy, I'm going to keep it at that, 1/12. What I do want to do, the appreciation I think is a bit high for Joburg. I'll keep that at 4%. Again, that's the kind of information I would get from Stats SA and one of the rental property price index reports. So sales price at exit, 20 years, rental growth 6%. this amount is way too high. That's why we're going to go to this report to find out how much we should be expecting. Again, Kempton Park, Ekurhuleni, like I said, and not City of Joburg. This is going to give us the rental payment index, good standing ratios, yield information, rental price information, property demographics, and household demographics. So town selected. So this is where Kempton Park is, if you don't know already. Modderfontein, bordering Modderfontein, bordering your Northmead, bordering your Eden Vales, and your Bedford Views. Yeah, that's the area that we are covering. Very close to the airport. Yeah, and very close to industrial areas. So you've got quite a bit of rental demand from people who work in the surrounding area. So that's always positive. So transactions, we're going to look at sectional titles because we're dealing with the sectional title. Let me just check that this isn't in the way. Yeah, I'm going to put it at the very top. We're dealing with sectional titles, right? So 2025, we've got volume. Yeah, so around 500. Yeah, around 500, no, around 250 that are at about 800,000 rand. Okay, that's the average price. Okay, that's fine. Let's look at investment properties. So 32-ish% of people have rental properties in the Kempton Park area. Less than 10% close to Robber Ridge. More so under Modderfontein. You'll realize Modderfontein is where the Reed is and Greenlee is, those new Baldwin developments, or newish rather. But yeah, this paints a good picture. I'm comfortable with this. And then Witfontein's also quite there. They've also got a very nice, very upmarketed development. You've got a rental payment index. So this basically tells us, relative to national, how well do people in the area pay. As you can see, it's green, which is good. So national average, slightly above average. Your Witfontein is above average. Like I said, it's very high end. And then your, make this a bit bigger, your Jurgens Park is also a bit above average. Kempton Park is at national average, and then you've got something just below. So those oranges you must just be mindful of when you're giving your percentage in terms of payment profile. What I'm actually going to do is I'm going to take this and I'm going to adjust our bad debts. Right, so our bad debts is 5%. Okay, I think I'll keep it at 5%. I think 5% is more than reasonable for Kempton Park based on what I'm seeing in this map. And then you've got your good standing ratios and your payment profiles. So 70% paid on time, 5% did not pay, 3.5% paid within the grace period. That's what you're seeing there. And then DNP, like I said, 5.5%. Paid late, 11%. Oh, that's quite a bit. So what I'm going to do is I'm actually going to make this 30%. Right, we can say 30%. People who did partial, did not pay, paid within the grace period and paid late, and only 70% paid on time. Look, that's not very good. That is not very good in terms of payment profile, but high risk, high reward. High risk, high reward. Then you've got the residential yield. So people are seeing, or this town is effectively seeing around 12%. Nationally, we're seeing around 11%. And then effectively, the town or Kempton Park is seeing around 10%, right? We're not looking at freehold. And then you've got your rental price, indexes. So rental ranges from 4,000 to 10,000, 11,000. That's quite a big range. That's quite a big bar. And then the average rental price is about 6,000. That's the amount I'm actually going to use for the purposes of our model. I'm going to use 6,000 here. Let me just see if I get more information that can help me tailor that a bit more. But right now I'm happy with 6,000. It's the average rental price in Kempton Park as of the recent, 1, 2, 3, 4, 5, 6, 7, 8, 9 quarters, which is about 2 years. So I'm more than comfortable with that. And then rental prices by bedroom number. So we're dealing with a 2-bedroom apartment. Yeah, so 6,000 again is coming through strongly. at the 6,000 rand. Under sectional titles. So here, 2 bed, market low 4.8, average is 6k, market high 7.5. Look, what you don't want to do, which is very dangerous, is you taking the high end, which is the market high of 7.5, and putting it on this apartment. And when the cash flows don't materialize, when the agent is telling you that rental is too high, and you're not getting or placing a tenant, and you keep saying reduce, you can't go back to the bank and say, hey, I miscalculated, take back the house. So I would rather we start with average rental on paper. And then when you reach out to an agent and an agent is like, look, we can actually start at 6.5, then it's a pleasant surprise to the upside rather than, the other direction. But that's just being me. I like being conservative. That's why I like modeling things before I get into them. And yes, it does hold me back from executing sometimes, but I would rather like the model fail and tell me don't bother than like I go in with my real money and my time and my effort, and then it doesn't materialize and I'm getting disappointed in real time. Let's look at the rental price distribution. So less than 3 bed, there's a lot of 1,000 rands. 3,000, about 10%. About 25% of people are renting around, if not to 1.8, 1.5. We've got people that are, let's say 8%, that are renting around 2.5. And then a lot of people that are renting in the 4,000 rand. So it looks to me like this is the sweet spot at Kempton Park, right? This looks like the sweet spot in Kempton Park, because that's 25 plus 8, so 33% plus 25, that is what, 58, let's call it 60%. So 60 plus another maybe 20, that's 80. Yeah, this looks like the sweet spot. That 1,500 to 7,000 range, that looks like the sweet spot for Kempton Park, in my opinion. So I would be more than happy to go with a 6,000 rand amount, or even splitting it and getting 2 people who are going to rent about 3, knowing that that is the bulk of the people that we're seeing here. That 3 to 4,000 sweet spot, you can get 2 people who are willing and able to comfortably pay those amount. 2 people, it's twice the people management. But if you've got an agent, then it's not really something that you have to worry about day to day. That's sectional title. Oh, that was freehold property. Let's look at sectional title. I was looking at the wrong one. It speaks to the same thing, right? You've got your less than 1,000, maybe 800 rand. You've got your 2,000. You've got your 3,000. Your 456. Again, 456 very popular. For less than 2 bed or 2 bed, yeah. The 2 bed is the darker number, so it's 456, 56 sweet spot. Again, I'm happy, I'm comfortable choosing the 6,000 in our model, so I'm going to stick with that. And then in terms of the rental price index, this is the overview of the rental increase or decrease trends. So again, you've got the orange, which means it's down. The high end is quite down, that property is quite down, and then the middle is sort of, there's no increase, so that's flat. And then there's a very little on up. So what I'm going to do is, instead of me expecting 6.2%, I'm gonna, year on year, I'm actually gonna revise that down to 3% off of the information that I'm now seeing, which isn't really positive, because what I'm basically seeing for the area is that rentals are actually staying flat. Right? That's what the none means. It means rent is staying flat year on year. So if you want to keep your tenants, you might have to negotiate a flat rental increase or very little, which is why I'm going from the 6.2% I initially had penciled in to a lower revised, 3%. Okay. We're going to look at the property types in this area. I'm seeing quite a bit of freeholds, 66%. And then I'm seeing, only 10% of flats. That's positive. Why? Because we're looking at flats. People like the gated estate. Another benefit of that is people who move around a lot, like me, like I'm out quite a bit. So it's nice to have a lock up and go. It's also people with kids, like people who want to be able to give their kid a key and for the kid to let themselves in after school and those type of things. So I think there's definitely, the fact that they are scarce means that there's value and there's a market for that. Now it's basically telling us that 37% of all properties are rented, but what proportion of that, or only 4,000 of those, are flats, and 15% are owned or paid off. and 40% are still owned. So there's not a lot of people that own their properties in the area. Like there's a lot of people who are still paying off their bonds. I guess that's valuable information. It means that it's healthy because it means that the banks are likely to approve your bond application because they are, approving other bond applications, in the area. That's what I'm gathering from that. And then in terms of the property size, do we have the property size? Let me just quickly see. So they said it's 47 squares. That's quite small. Okay, so let's see for flats. Okay, they're showing a number of rooms, 1 to 2 rooms. Rental properties, 1 to 2 bed and 3 beds. Okay, so 23% of rental properties are 1 to 3. Okay, and these make up only 13.5% of all properties. Okay, and then household size is telling us that the majority of rental properties have a single people, so that's perfect, right? It's people who live alone. The only thing that isn't great about that is that we tend to move a lot, right? Because it's just me. So if I don't like a place, I just move. I don't have to think about it. I don't want to go back and forth with the landlord. If I don't like it, I just go and I find another place. I don't have to think about school for people or kids. I don't have to think about inconveniencing anyone else. It's just me. If I hate it, I go. Whereas if it was 2 people, which is the 26% you're seeing here, it's typically partners or it's someone that's living with their kid. Those people tend to be more grounded. They tend to stay a bit longer in a place. So if you want a single person, then you must know that the other side of the coin is that they might just pack up and go. But if you've got 2 people, then it can be a nightmare in terms of the application process, because sometimes people don't want to show the other person their pay slips, and sometimes the partner up. You get what I mean? So there's a lot to also think about. It is best when it's just like a mom and a kid or a dad and a kid, because then you're only dealing with one pay slip, but you've got the benefit of people staying longer. Yeah, well, so it's sort of the best of both worlds. So just be mindful of that, right? That's what household size would help us with. And then you've got a population group. It's showing that close to 50% of properties are owned by Africans, and then around 60% of us are in the rental market in that area. Yeah. And then language and education, this is important if you've got a kid that you want to live with in the area. If you're buying not for investment, although here we're strictly looking at investment, but this is important because it tells you the type of parents that you might attract. The schools are quite diverse. There's Afrikaans schools, there's English schools, there's Sepedi, schools, there's Zulu schools, unspecified, and then there's others. So I think this is quite positive. Johannesburg is beautiful in the sense that you can find a bit of everything anywhere in terms of language of instruction. So, but this is quite old, 2011. So you can imagine this has changed quite significantly over the past 14 years. I imagine in a positive way, more languages included and such. And then on the right, it's basically showing you the demographics in the area. So there's a lot of people who've completed their grade 12 as the highest education. Some people have gone higher, about 17% have gone higher. And then you've got about 7% that have no schooling. Then you've got 6% of people who have some primary education, and then 18% who have some secondary. This just gives you color in terms of the demographics in the area. And then household head age, so you've got 41 to 50. Those people typically have kids, so this is really positive if you are the person that is looking to rent this out, like I said. So you've got your 30, your 40, your 50. Yeah, these are good ranges. It's good that the histogram is the modal point is round about there. And then this is also what you're basically seeing here, the age group just split. Right, so yeah, like I said, 30, 40, 50, that's where you want to be. That's about, what is that, 37, yeah, that's about 62. That's 62% of the population right there. Employment status, like I said, it's close to the airport, and it's close to a bunch of industrial areas, so 50% of the people are employed. 27% not applicable. I'm not entirely sure what that entails. And then you've got 15% youth, the boys and the girls that are too old, or the boys and the girls that are too young. and then you've got about 5% of people that are unemployed, and this tells us the different types of sectors. You've got people that are largely unspecified, and then you've got few in the formal and few in the informal sector. And then in terms of annual household income, how is this going to help us? It's basically going to tell us what we can charge for rental. You'll remember we already said we're comfortable charging 6K. And this is basically telling us how many people can actually afford our 6K. So 6K multiplied by 3, because you don't want people, as a general rule of thumb, it's what agents will say when they're advertising. You don't want someone who's paying more than 30% of their rent for your as a tenant. So here you've got about 6% of people that are earning between 19 and 38. I think that is annual though. So what you want, I don't have my calculator with me. So I'm gonna do, what am I gonna do? I'm gonna do 6 times 12. Yeah, that's 72 times 3. So you want people that are earning at least 216. So I'll take these guys. Yeah, these are the guys you want. So you want people that are earning more than 216, so around 300,000. Well, I don't want to take here the gray, but you want this, this, and this. So that is basically 20% plus 9. So that's 30% plus other, which is about 8%. So it's about 40% of people that can comfortably afford, the 6K rental. It's not a lot. It might mean that we would need to maybe increase the vacancy rate, maybe pencil in that we might have to wait a bit. We might not be able to find someone comfortably at the 6,000 Rand mark. It's just something to be mindful of. I'm not going to adjust the model for that, but it is something that I want to keep at the back of my mind. Yeah, that's what we're basically seeing here in terms of the annual household income. So these are the people that we would want. There are people that are earning between 300,000 and 2.5 million rands annually. Those are the people that we want, and that is the 30 odd percent of people. I calculated that wrong. Yeah, it's 30. It's 30 people, not your 30% or not 40%, which is quite low if we're being honest. I'm going to go back to the model and we're going to do the grade reveal. Is this a buy or not? Okay, so just recap. We're offering 100% at market value. We can go lower, we probably will, but let's just see for purposes of this exercise. We're keeping the bond interest rate at 10.75. We're going to put a 1 Rand deposit so my model doesn't break. We're going to pay 42,000 Rand up front. We're not going to fix anything. We're comfortable with what the apartment looks like. We're going to pay those levies, which are the stipulated levies, plus what we think is sewage ekuruleni. We're going to pay 420 in rates. That's also given. We've calculated a 5% allowance for bad debts. We're going to put away 7.5% for repairs and maintenance. And that's what we have in our reserves, simply because the unit is quite old. We're going to put away 5% for property management as well. That's what we're going to be paying our agent, who's going to place us a tenant and collect rental monthly. We're going to put nothing for lease up window, but we do have a vacancy of 1/12. Like I said, we're going to keep 20 years. We've revised down the rental growth percentage based on what we've seen on our report. Then we're going to hold it for 20 years. That is our exit strategy. We're assuming a 4% appreciation, which I think is quite high for Kempton Park, but let's be positive. We're assuming we're going to pay 5% in terms of the cost of sale. Ooh, I hope this isn't in the way. Okay. And then market value is 455. That's the listing price. And we're saying we're comfortable with a rental amount of 6,000. My leverage return is, of course, broken. Yeah, I still don't know what's wrong with that. Okay, so it's a no because we're losing 289,000 by going into this deal. That is our leveraged, what's her name? It's saying we mustn't go into it. Let's look at the chart. It's negative by 42,000 initially. That makes sense because that's times 0, and that is the transfer cost we're paying. Year 1, it's negative by 20,000. That's about 1,500 Rand a month. And it stays there, and it's forever there. Year 14, year 15, up until year 19, and then finally when you exit, you make a bit of money from the sale, from appreciation. So you know what I'm actually going to do? I'm going to decrease the offer price to let's do 400. That's what we wanted to do anyways. So the bond amount will go down by about 600 rand, right? And it's 80% of discount, which is about 23, no, 13%. Yeah. Why is my math so bad? Yeah, it's about 13%. We're gonna do a discount of 13%, and let's see if that changes things. It's still negative, and you're still losing about 200,000. It's less here because you're registering a smaller amount in terms of the bond, so the costs initially are going to be lower, and then it's minus 13,000 initially. What that means is about 1,000 rand a month, but it stays there. That is the problem, and the reason being that the rental is only increasing at 3%, but the costs are increasing more. So that's the problem. It's always going to be negative, and it's always going to stay negative. This wouldn't be a buy for me. Let me know what you think. Let me know what you think about Kempton Park. Let me know what you think about this particular investment. Let me know what areas I should do next week. Thanks for watching. Please engage in the comments. I really appreciate it when you guys do. It makes me want to do more of these.